Do you know that wealthy Americans skirt $160 billion a year in tax payments? That's crazy and unbelievable, right? You would be wondering, how can one just evade taxes like that? Well, I have the answers for you. All right, hold on to your wallets because I am about to tell you about how the super rich avoid paying taxes. Brace yourself, it is going to get wild. According to the Treasury Department, the top 1% of the super rich avoid paying over $160 billion in taxes every year. Oh yes, talk about dodging their civic duty. I know what you are thinking. How on earth do they do that? Well, they can afford fancy pants tax lawyers and accountants and have access to some tax benefits that we regular folk can only dream of. Well, I am talking about benefits that require a serious amount of wealth just to get your foot in the door. It is like a VIP tax club to which you and I are not invited unless, well, we have millions of dollars in bank accounts. And guess what? I am not talking about something that is illegal. No, I am not even kidding. Ed Smith, senior tax and estate planner at Jancy Montgomery Scott, says, as long as it is done legitimately and there is no fraud, I am okay with it. I guess it is just the super rich playing by the rules that they wrote themselves. Anyway, back to the tactics. Some of these fancy tax benefits include things like trust funds, offshore accounts, and other complex legal maneuvers that the average income class can barely wrap their heads around. You would be thinking it is like they have a secret code book or something. Let me tell you the fact here. It is not that big a deal. As long as you know the rules and play the money game with the right strategy, you can get those benefits too. Lucky for you, I have come up with a list of tax-avoiding methods that only the rich know about. But before I go further, let me remind you to like the video and subscribe to my channel. Also, do not forget to hit the bell icon. 1. Foundations. The first point on my list is foundations. Now, these are not your regular old foundations like the one you put on your face. These are foundations with a capital F, and they require some serious cash to get started. Well, I am talking millions of dollars, my friend. But do not worry, you can start with as little as $250,000. So here is the deal. When you contribute to a foundation, you get an immediate income tax deduction of up to 30% of your adjusted gross income. And the best part? You only have to distribute about 5% each year for charitable purposes. That means you get to hold on to your money and make it work for you. Plus, you get to avoid high capital gains tax and grow your money tax efficiently. It is like having your cake and eating it too. When you contribute stocks to the foundation, you can deduct the full fair market value and not pay capital gains tax. And if the foundation sells those stocks, they only have to pay a measly 1.3% excise tax on the capital gains. That is practically pocket change for the super rich. Let me break it down even further for you with an example. Say you invest $250,000 in a private foundation each year for 5 years, earning about 8% annually. That will give you about $1.43 million after excise taxes and minimum annual distributions of 5% to charitable activities. Not too shabby, right? Compare that to the sad $1.38 million you would get if you invested the money in a taxable account and paid capital gains taxes along the way. So there you have it, my friend. The super rich has found yet another way to keep their money safe and sound while avoiding taxes. It is like they're playing a game of keep away with the government. But hey, as long as it is all above board and legal, I guess you cannot fault them for being savvy with their money, right? 2. Gifting. So, another way through which the wealthy get wealthier is by gifting. Yes, I am not even kidding. You can give up to $17,000 per person tax-free, which means you can give your entire extended family and friends some huge cash without Uncle Sam breathing down your neck. And if you are feeling extra generous, there is a lifetime gift tax exclusion of $12.92 million and 25.8 $84 million for married couples. So this basically means you can give away a whole lot more before the IRS starts to care. So go ahead and share the wealth, but make sure to keep some for yourself too. I mean, how easy are you want it to get? I am literally telling you a way to make money with gifts. I know that sounds insane, but it is true. 3. Family office. Yes, you have heard that right. The rich know that making a family office will help you avoid taxes. Confused, right? Well, let me make it simple for you. What the rich do is that they create a family office with at least $100 million in assets. That is right, I said $100 million. With a family office, you can get all the perks of a business and deduct your expenses from investment management to concierge services. Now that is a smart way to generate wealth for generations. Plus, if you are feeling generous, you can even get tax breaks for your philanthropic investments. And the rich do not have to worry about those pesky investment and tax advisory fees because a family office can take care of those too. So, all the rich have to do is just sit back and watch their wealth grow, all while avoiding those pesky taxes. Easy peasy, right? 4. Investments. All right, let me break it down for you. So, you know how you and I work for a living and get our income from our jobs? Well, the rich know that a 9-to-5 job is not supposed to make you wealthy. A monthly paycheck will only help you meet your monthly expenses. Do you know the big wealthy CEOs out there get most of their cash from investments, not from their salaries? According to Salary.com, the average CEO salary is around $812,100, which may seem like a chump change compared to what we hear about their millions, but that is because their real income comes from their profitable investment deals. They might get some extra perks like deferred compensation, stocks, or stock options from their work, but those are not taxable right away. And when they are not working, they have got even more investments making bank, like interest, dividends, capital gains, or rent if they own real estate. To sum it up, it is a whole different ballgame for these guys. 5. Changing residence. Have you heard about Jake Paul? Well, he is not just a YouTube sensation and pro boxer, but he is also a tax-dodging mastermind. He and his brother Logan moved to Puerto Rico to avoid the high taxes in the US. And honestly, who can blame them? Puerto Rico offers some amazing tax benefits for US citizens who become residents. For one, you can keep your US citizenship, which is a pretty amazing deal. And the best thing is, you won't have to pay US federal income tax on your capital gains, even if it is from U.S. sources. Plus, any interest and dividends you get from Puerto Rican sources are tax-free. It is like a tax haven, but without having to give up your U.S. citizenship or green card. No wonder Jake has made the right decision. So, if you are a millionaire looking to escape high taxes, pack your bags and head down to Puerto Rico, my friend. I mean, who would not want some sunshine, sandy beaches, and maybe even a little salsa dancing on the side? And yes, of course, with little to no taxes. I mean, that is something, right? So, if you are a wealthy person who can avail all of these tax-avoiding opportunities, why wait? Just go ahead and buy a house in Puerto Rico, make loads of investments, or start a family business and give your loved ones a lot of gifts. I know that sounds a little too easy, but trust me, if you have got the money, it should be no big deal. And for the rest of you who are not that rich, all you have to do is watch my other videos on tips to grow crazily rich. So that was all from today's video. I hope you liked it. Well then, see you in my next video. Stay tuned.